Good morning, friends. Welcome all. Again, in this lockdown period, we have a today great personality with us, CA Advocate V. Raghuraman Sir. We are welcoming you, sir. We have our guide, TC Bafna Sir. We have a good friend, Yatish from Goa. We welcome you, Yatish, on this platform. Would like to request Bafna ji to for a welcome address for this 2 days judgment series, important judgment by V. Raghuraman Sir. Over to you, Bafna ji.
Thank you, Virag. Good morning to all. Even this Yatish Yernakar and Advocate Raghuraman Sir and all viewers. This is a great opportunity for me to welcome our most valued Honorable Speaker, CA Advocate V. Raghuraman Sir from Bangalore, who is one of the stalwarts in the indirect taxes litigations in the country, which are very important part of the determine the tax liabilities and the further guidelines for the tax authorities in the tax matters. These are the final judgments for decision making in the next future of the tax liabilities authorities also. So this is very valuable, very important for viewers and for all these professional people to ascertain the tax liabilities under the GTS liability litigation cases and etc. These are renowned personality in these judicial authorities. So most welcome this Advocate V. Raghuraman Sir. Good morning and welcome again.
Thank you, Bafna ji. Yatish, you can able to hear us?
Yes, now I can hear you. There was some issue.
Okay, we are not able to see, that's why. Yatish, you
Yeah,
will
there's a
give
webcam.
formal introduction of Sir. Yatish has taken good initiative to connect with Sir and helping us in organizing this, and also help us in the participation from many other locations. Yatish, over to you for formal introduction of Sir.
Thank you. I think Raghuraman Sir is a very well-known faculty amongst the GST practitioners all over India. His academic qualifications includes BCom, FCA, ACS, LLB, and a graduate CWA. He has been meritorious throughout his academic career. He's got first rank in BCom, 38th rank at CA Inter, 24th rank at CA Final, second rank at CWA Inter, and 25th rank at CWA Final. Sir is a very popular faculty, and he comes up with very outstanding views, on many aspects, and that is where I think his strength is. So since GST is a developing law and still a lot of things are getting uncurtained, I think these landmark judgments is one of the themes which I think Sir is very well poised to guide us. So I think without further ado, I think let Sir take it over. There was some delay from my side, so sorry for that. Apologies.
So thank you so much, Yatish. Now I would like to request Raghuraman Sir to start the session, sir. Thank you so much.
Thank you very much, Mr. Yatish. Thank you all for kind introduction. In this series of webinar, just today and tomorrow, we will look at some important judicial pronouncements which have taken place ever since the GST was introduced. We look at what is important means what we will do is an analysis of the important judgments. Try to cover as much as possible in terms of finding out, in terms of trying to find out what is the ratio of these decisions, whether in our opinion this seems to be right or wrong, whether these decisions, what will be the impact of these decisions going forward. We will look at decisions across the spectrum because we will not concentrate only on one or two aspects of the GST law. We'll try to look at starting from the earlier sections up to the sections relating to confiscations, search, seizure, arrest. All of these decisions we'll try to look over the next 2 days. So without wasting too much of time on introduction, as has been told to you. We'll go right into the decisions and see which are those decisions which are impacting the GST. What decisions are there? How some of them can be overcome by a different interpretation that we may place on these on the provisions. Whether our interpretation would be tenable, not tenable, only time will tell. The first decision we will look at challenges to several levies and provisions that have taken place over the last 2-3 years. One of the earliest cases is the Union of India versus Mohit Mineral, where the challenge was to the Compensation Cess Act itself. Mohit Minerals was trading in coal. The facts of the case are that Mohit Mineral was trading in coal. They would import coal and sell it. Before the GST was introduced, they were liable to pay clean energy cess. Now, when GST was introduced, at least 17 cesses were subsumed in GST. And a compensation cess was brought about by virtue of the Section 18 of the Constitution Amendment Act. Now, the challenge was whether a compensation cess at all can be levied when you have introduced the GST and said there should not be multiple taxes in the country. The issue was to the legislative competence to introduce a compensation cess act. One of the pleas that was taken by the petitioner, and rightly so in my view, was that once you have introduced GST, you have subsumed excise, you have subsumed service tax, you have subsumed all the VAT laws, 17 different cesses you have subsumed. After doing all this, why do you introduce a cess act over and above the GST Act? In my view, it was a very good challenge. But when it comes to legislative competence, challenges often, sometimes they succeed and sometimes they fail. This is a case where the challenge to the cess act failed. We look at two things in this act, two things in this decision, which are of some importance to us. When you look at the legislative competence of the union, what you need to look at is, there are two things. When GST was introduced by virtue of Article 246A, there is a very important paragraph in this judgment which says 246A is a special provision for the purpose of introduction of goods and services tax. So we should note that this is a special provision, 1. 2, it overrides 246 only in respect of the law relating to goods and services tax, nothing else. We should keep this in mind very carefully when we go into any section which you are going to attend now or you have attended earlier. 246 is a special provision for the purposes of goods and services tax only, and nothing more and nothing less. It overrides 246 only to that extent. So to the extent of goods and services tax, don't look at 246, look only at 246A. Everything else you look at 246. This is the ratio of our discussion as regards this case. So when you look at 246A, you will see that it is a tax on supply of goods or services. It is not a tax on supply of immovable property. Let me be very clear on this. There is a view being taken by several people that immovable property transactions will come into the GST regime. I'm sorry to tell them that that is not the intent of 246A at all. 246A is restricted to goods and services. You may have defined services as anything other than goods, but then there are two decisions which you have to carefully see. See the decision of the Supreme Court in All India Tax Practitioners case 2007 SCC, and you look at the Association of Leasing Industries case 2011 SCC. Both these decisions says theory of equivalence applies. What do you mean with theory of equivalence? Theory of equivalence means this. I am taxing goods, I am taxing services. On the theory of equivalence means that I treat goods and services equally. One normally, I'm not saying in all cases, one normally represents the tangible aspect and another represents the intangible aspect. Goods normally is tangible, movable property. Need not always be tangible. For example, electricity. For example, you may not be able to see it, but you can feel it. It's tangible. Intangible properties like copyright, like your trademarks, can sometimes be taxed as goods when there's a permanent transfer. But in general, the distinction that is there between goods and services is this, that goods is tangible in general. Services is always intangible because you can't see it. You cannot, you know that some service is being rendered. Keeping this two in mind, the Supreme Court in those two cases, the All India Tax Practitioners Federation and Association of Leasing Company, would say that tax falls on goods and services on the theory of equivalence. Theory of equivalence means I treat goods and services on an even keel. It is not to bring something else into the definition of services. It is to tax things which are akin to goods as services. But only thing is that services is intangible but satisfies a want. Goods is tangible and also satisfies a want. You look at it that way. If you look at it from that way, and the observation in Mohit Mineral's case, this law is peculiar to the law of taxation of goods and services. This is one. So keeping this in mind, we will go in and see what this judgment says. This judgment says, as far as a cess is concerned, Section 18 of the Compensation Cess Act said this. It said that a law will be formulated for the purposes of compensating the states. How the Supreme Court interpreted this was, law means one, any law which will compensate the states. This includes taxation law. Because it includes taxation law, the cess can be validly enacted by the union legislature. Plus, going back to theory under 246 where cesses can be levied, what the Supreme Court said was, when we look at 246, what is the principle you follow? The principle you follow is simply this. When you look at 246, list 1, list 2, list 3. In Hext Pharmaceuticals, you will find a decision, AR 1983. There the Supreme Court said, look at list 2, look at list 3. If a subject is not mentioned there, automatically it falls in list 1, especially entry 97. You don't need to do any further analysis. If it's not in list 2 and list 3, you can always take it back to list 1 by virtue of Article 248. Read with entry 97 in list 1. So in effect, it means this. What does it mean? A cess can be levied under the residuary entry 97 itself. Read with Article 248. It need not be justified under the 246A at all. And therefore, a cess is competently levied by the union legislature. Read with the fact that Section 18 of the Constitution Amendment Act itself said that the union can pass a law to compensate the states, and taxation is also a law. This is as far as the first challenge to the levy of compensation cess is concerned, and it failed. Economically, if you look at it, chartered accountants, all of us are CAs. Economically, it makes no sense to keep adding cesses to a tax levy. They could have well merged this with the taxation law. But when courts look at this, economics need not always form the basis of court judgments when it especially comes to legislative competence. A larger latitude is given to the legislature to frame laws. So this is where the challenge to the Compensation Cess Act failed. Second, and which is a more important practical issue for us, is this. Mohit Minerals had paid clean energy cess prior to 1/7/2017, and they had to carry forward this cess. Now, today I am paying from 1/7/2017. I am liable to pay compensation cess. That being the case, what happens to my credit? This was very valid. If you ask me, this is an extremely valid point on which the writ petitions had been filed. Unfortunately, in Mohit Minerals case, the Supreme Court spent not more than exactly 5 or 10 lines to discuss this. It's a misfortune. The Supreme Court simply said, if you cannot set it off, it is because of legislative policy. The Supreme Court did not examine its own decisions in the earlier cases, where the theory of vested right was beautifully analyzed. Aishar Motors case, which comes in 106 ELT, Daiichi Karkaria's case in 112 ELT, where the concept of vested right was beautifully analyzed. Supreme Court specifically said that credit is nothing but tax already paid. Please keep this in mind when you are replying to notices or you argue cases. Credit is tax already paid. If I take credit, it's on an invoice sent by somebody else who has paid the taxes or who's going to pay the taxes. So the government doesn't lose any money. They're collecting the taxes from somebody and that is given as credit to me. So if you look at this Mohit Minerals case, tax was already collected. The clean energy cess was already paid. So it is a credit which has accrued as a right to Mohit Minerals. And they were eligible to set it off. Now, issue was whether through a legislative policy, which has not at all been stated anywhere, you could simply wipe out the credit. This aspect, unfortunately, does not seem to have been discussed in Mohit Minerals case. And in fact, this was the main plank of the case itself, but does not find more than 10 lines of discussion, where none of the case laws which Supreme Court, like Aishar Motors or Daiichi Karkare, none of this was discussed in this decision. There is no reference to those decisions. It is simply the cess has been thrown out on the clean energy cess credit has been thrown out on the basis that there is a legislative policy. I would only say this. When you look at what the government has done, they could have simply put this under the transitional provisions and allowed these people to take the credit. There is no reason why you have this bureaucratic bungling and ego issues. If you look at the transfer, matters which are pending in several high courts and have been actually allowed, the writ petitions have been allowed in several high courts. It is nothing but an ego issue between some bureaucrat who doesn't want to give the credit. I can't see any reason. So, as far as legislative competence is concerned, compensation cess is legal, it's valid. As far as the clean energy cess is concerned, I have a difference of opinion, a humble difference of opinion with the Supreme Court judgment for the reasons which I have stated. Let us come to another case, two cases, duty-free shops and GST on duty-free shops. Now, what was the position earlier and what is the position now? If you look at the CST law, which was prevalent across the country, transactions, the course of import or export, are always outside the ambit of taxation. Even though they were subject matter of taxation to CST, tax was never being levied and collected in these cases. But there was substantial controversy as to what do you mean in the course of import or in the course of export. Now, the CST legislations, if you see, several high courts had taken several views that the sale had to take place while the import was taking place. That is, in the course of import, if you sell, then it becomes sale in the course of import. But if you import first and then sell later, it becomes sale after import, and therefore it is not in the course of import. Some high courts would take this view, some high courts would take that view, but the predominant view was that if sale was done in the course of import, then it is outside the ambit of the GST Act. One peculiar case which came up, however, was this. Let us assume I have a bonded warehouse where I stock certain goods. Now I get an order from a local customer for supply of these goods. Let us assume it's a private bonded warehouse which I have kept stocked the goods in my own premises. I supply these goods to him. Can it be said that this is a sale in the course of import or export, as the case may be? Many high courts had held, yes, it is sale in the course of import because it is bonded still, it is not cleared from the warehouse. Unfortunately, a decision of the Supreme Court, which was reported, passed by Justice Kanvilkar's bench with Justice Dinesh Maheshwari, 2020 TIOL, you'll find this judgment said that if you have imported the goods, kept it in a bonded warehouse, and then sold, it is not covered in the terminology in the course of import. Unfortunately, the Supreme Court did not see its own earlier decisions which dealt with what is import. Garden Silk Mills case, you see what is import. Import starts from the time the goods enter the territorial waters and is completed only when they mix with the landmass in India. This is very important. Only if they mix with the rest of the goods in the landmass in India, then import is complete. So strictly speaking, when goods are kept in a bonded warehouse and they do not suffer customs duty, import is not complete. Import is complete only when the goods are cleared into the what they called the domestic area. Import is complete only when the imported goods mix with the landmass of India, mix with the other goods. Fortunately, the Supreme Court did not see this. But fortunately for us, in GST regime, if you look at Schedule 3, in my view, if you look at Schedule 3, carefully when we look at Schedule 3, several things get cleared out here. And I'm very happy that this problem which we were facing in the law relating to CST, in my view, humble view, we will not be in a position, we will not face those problems here. If you look at the entries, supply of warehouse goods to any person before clearance for home consumption. This is very important. What do you mean by this terminology, home consumption? Home consumption means that it mixes with the goods in India. This is called home consumption. Section 46 of the Customs Act uses the same thing. So if goods are stocked in a warehouse, any sale, any supply which takes place, even after their stocking in your warehouse, does not come within the ambit of the GST law, because it is neither a supply of goods nor a supply of services as per Schedule 3. So the ratio of this decision which we were discussing as regards CST does not apply to the GST law in my humble view. Now if you look, now come to the fact situation which was analyzed by the High Court in Atin Krishna's case. What did the High Court say? This related to duty-free shops. There is a difference between duty-free shops and private bonded warehouses held elsewhere. Duty-free shops are also private bonded warehouses, but they are in the customs area. Other private bonded warehouses may be outside the customs area. Now, this fact situation relates to duty-free shops in the customs area, but in my view, this will very much also apply to goods stored in a private bonded warehouse which are not being cleared for home consumption. So what does this decision say? This decision says if I import certain goods, keep it in the duty-free shops and supply it to international passengers who are departing, there is no question of bringing this into the tax net at all. Very clearly the High Court said these goods are not cleared for home consumption. Very important. These goods are actually exported because an international passenger walks into the customs area. He goes to the duty-free shop. He buys the goods, takes it out and goes off. It does not come back in, he goes off. So what the High Court said was, this is a case which has to be zero rated. This is a case where IGST is not payable because the duty-free shop actually exports these goods to foreign international passengers, whoever it is who comes and who goes to the foreign countries. Therefore, it cannot attract the charging section itself, is what the High Court said, and rightly they said so. But what is the implication of this case? Can I extend it to what they call bonded warehouses outside the customs area? That is what we have to think. Customs area is an area where goods are stored before their clearance for home consumption. Now, you may have a private bonded warehouse in your factory. SCZs, strictly speaking, are private bonded warehouses which are in different locations in India. Now, if I have a stocking point, let us say in Mumbai, let us say in the heart of Mumbai, I have a warehouse, which is a private bonded warehouse, and I stock certain goods, I import and stock certain goods. Can you say that this decision will apply there? The answer in my view is yes, even though the facts are different here. The answer is yes, because of the terminology used in Schedule 3, which says supply of warehouse goods to any person before clearance for home consumption. So supposing I supply it to somebody and it is not cleared from my warehouse, then these will not attract the GST law. But the moment I supply it to a person, what is the procedure I follow? I file a bill of entry and clear the goods. At that point only I need to pay IGST. When I clear the goods from a bonded warehouse, whether it is in the customs area the bonded warehouse or outside the customs area bonded warehouse, when I clear those goods, only then I am required to pay the IGST law. IGST. So this ratio of this decision will very well apply wherever I have private bonded warehouses and I am exporting those goods. That will also get covered by this decision. Same view in Atin Krishna's case was followed by the Mumbai High Court. Mumbai High Court also took this view, and in fact they said one more thing. As per Article 286, supply made in the course of import or export cannot be subjected to tax. You cannot subject them to tax because especially a state government cannot subject them to tax. International passengers, therefore, who buy from duty-free shops will not be subjected to any tax because of these two decisions, which I think are landmark decisions. Now we come to a very extremely important decision, which we have been probably telling across the country over the last so many years. Can you charge GST on ocean freight? In Mohit Minerals case, the Gujarat High Court brought about a beautiful decision where there is a challenge. What is this ocean freight? What is the problem with ocean freight? It is this. Let us assume that I am importing certain goods. Now, generally, when I import certain goods, especially on CIF basis, the person who transports, supplies the goods from me, that is the foreign supplier, will hire the ship, will pay the freight and send the goods to me. I will clear the goods in India and take it out. Now the issue is the notifications issued from time to time under the IGST said that they introduced this. In fact, they said the importer of goods will be liable to pay on reverse charge basis, as if ocean freight is a services. So they put it under the reverse charge mechanism. Issued notification 8/2017, 10/2017, and this was challenged at the High Court. What is the grounds for the challenge? Grounds for the challenge is simply this. As an importer of goods, I don't even have privity of contract with the person who gives me the freight services. I don't even know who the freight forwarder is. I don't even know who's carrying this. All that I know is that the foreign supplier has put it on the ship and intimated me, you can clear these goods from so and so when it reaches your customs port. So if privity of contract is not there between me and I don't even pay for the freight charges, that payment is also made by the foreign supplier. Where is the question of you saying that I am receiving the services in India? This is a very important concept which we should keep in mind. If the services are received in India, only then can you say that there is a receipt of service in India and therefore at all the reverse charge mechanism will be kicked in. If there is no receipt of services in India, the question of you paying reverse charge does not arise at all. And how do you find out whether you received services or not? Very simple. You should have a contract with the person who's supplying the services. So if the Indian importer had a contract with the transporting shipping line, as they call it, if they had a contract with him and paid the freight, well and good, then maybe you will say that reverse charge can apply. But this is a case where the foreign supplier of goods himself arranges the shipping, himself pays the amount and sends it to you. So that is why it was challenged, saying that first of all, I am not even in the picture. How can you tax me? 1, 2, and very important, when you are charging the customs duty, which includes the freight element, on CIF basis, you pay customs. When you pay customs duty under the present law as it stands, IGST is collected already on the freight component. When I clear my goods, I pay basic customs duty plus IGST. Now, this calculation of IGST is made on what basis? It is made on cost of the goods, insurance of the goods, freight of the goods, plus the duty paid. Now, this is how you calculate the IGST. Already I have paid the IGST on freight when I clear the goods. How can you again bring about a reverse charge and say that it should be taxed as services? Second, which was also accepted by the Gujarat High Court. Third and very important thing, which is also we have to take note, is if you look at the concept of composite supply, when goods are supplied, the section says, I am not saying it, the section says, section 8 says that when there is a composite supply of goods, the incidental charges will also be treated as supply of goods. That means transportation and freight, if they are bundled in along with this, as in CIF contracts, it becomes a supply of goods. The principal supply is goods and the ancillary supply becomes services. The entire thing is taxed as supply of goods. If that be the case, how can you introduce a notification identifying only the freight element and saying that it is services, and when it has already suffered tax as goods? In the landmark judgment, the Gujarat High Court went through all these grounds and several other grounds that were taken up and held that these notifications are bad in law for all the reasons which I am telling you. This is a landmark judgment. I know that the revenue would have gone in appeal against these judgments because that is what they do nowadays. But fact of the matter is, I feel that this is a judgment which has very accurately and beautifully analyzed. In fact, a parallel judgment was also passed by the Gujarat High Court, striking down ocean freight on the service tax regime also. So both in service tax and in GST, the Gujarat High Court has been kind enough to quash the notifications and bring out a beautiful judgment, clearly setting out these principles which I am discussing with you. Please understand, unless we challenge this kind of an affront to the business, you will not get favorable decisions. You may say, no, it takes time. Some decisions are favorable, some are unfavorable. What do we do? Retrospective amendments may come about. All that is there. I agree with you. Fact of the matter, however, is that you get very good decisions sometimes, like what this Gujarat High Court judgment is on this aspect. The next decision that we are going to see today is a very, very important decision of the Bombay High Court. Whether the fees received and charged by a receiver is liable to be included for the GST charge. What do you mean by this? Fact situation is this. Let me give you a simple fact situation. A is a owner of property. B is occupying the property illegally. A says he is occupying illegally. B says, no, I am not occupying this property illegally. I am occupying in my own right as a tenant. So A files a case in the civil court and says that I want possession of this property. B says, I will not give you possession of the property. He files his written statement against A. B has let out this property for a rent, let us say. Now, this rent is payable to A. As per A, it is payable to A. As per B, nothing. I am in possession of the property. I collect whatever rent is there. So the court, sometimes what they do in these property matters is, when a rent is being collected, they say pending this suit, pending resolution of the suit as to who is the owner and who is occupying legally or illegally, the court appoints what is called a receiver. He takes over this property, and whatever comes from this property also is paid over to him, and he keeps it. Interest. Finally, whoever wins this case, this rent will be handed over to them as what they call mesne profits sometimes in legal language. Now, this compensation or royalty which the court ordered to be paid to the receiver, whether this is liable to GST or not was one of the questions which came up. What the court held was, first of all, it is a fee under the direction of the court. Because it's a fee collected under the directions of the court, it will fall under Schedule 3. Services by any court or tribunal established under any law for the time being in force. It's under that AGs that the Bombay High Court said it will not be, no GST will be paid. 1. 2. They also said that there is no supply here. The royalty which was paid was a compensation for violation of the plaintiff's legal right in the suit premises. The defendant was in possession. He may not have had right to occupy the premises at all. So whatever payment was being done by him as a royalty figure and given to the receiver is a compensation. It doesn't come within the ambit of what they call tolerating an act. We had this in the declared services regime in service tax. We have in Schedule 2 today a very funny entry which I have commented. So many of my sessions have already commented this. Tolerating, agreeing to tolerate an act or situation. Bombay High Court said, whatever this is, it is nothing but collection of rent. And if at all whoever has to pay the rent at that point of time when it is decided, GST may be liable on the rent portion. But when the fee or royalty is collected by the receiver, it does not partake the nature of any supply, first of all. 1, 2, it is towards compensation and damages which cannot come into the ambit of Schedule 2. Bombay High Court is absolutely right, because there is no reciprocal relationship which exists. It is not that somebody supplies a service and expects a consideration in return. It's not that. The plaintiff says my legal right has been lost because of the defendant, and therefore as a compensation he is paid some money. There is no supply element here. Beautifully done. What probably the Bombay High Court could have also done is to look at the European Court of Justice judgments which are there. Jagran Mohar's case and so many other cases, which says that there should be a payment for a supply. Supply means something positive which adds value. Negative covenants do not make a value-added tax payable. If you see in those cases which went before the European Court of Justice, the issue there was a typical case. In Netherlands, for example, there was excess milk production. The government told the farmers, please don't produce so much of milk. Cut down the production of milk, we'll compensate you. The tax authorities said this compensation which is payable is a payment for tolerating an act. Act is of non-supply. European Court of Justice said, no. Supply means something which is positive. Negative supply is not supply because no value is added. And therefore, no VAT can be collected on those transactions. The same analogy applies to Indian law also. If you look, for example, this employee compensation paid, let us assume that an employee quits without serving his notice period and some salary is recovered. Madras High Court in GT&D's case, which is reported in 2020 TIOL, specifically said there is no supply element here at all. You cannot bring them to tax. Even in HCL Learning's case, the tribunal took the same view, that is in 2019 TIOL. They took the same view. There should be a supply and then only you can charge. Madras High Court took correctly the view. There should be a supply, then only there is a charge. There's no supply, there's no rendering of services. The question of you charging GST does not arise. So this is Bombay High Court's view, which I feel is absolutely right on this aspect. Now we come to very, very important judgment of the Gujarat High Court, Maxim Tubes. This judgment itself is as a result of the flip-flops done by the government when they introduced the GST regime. When they introduced the GST regime, there were two types of exports which were happening. Physical exports which go outside the country and deemed exports. Now, on some advice which the government got, we don't know what advice that is. They brought about a notification on 13/10/2017 amending the earlier notification. They said henceforth, if you want the benefit of advance authorization where you can get duty-free imports, you must have only physical export. Deemed exports is not recognized. Further, you must import the goods first, then only export. If you have anything in stock, that will not be counted for the purpose of this notification. If you look at the foreign trade policy, to keep the wheels of commerce moving very safely, very, very smoothly, you could use your existing goods, manufacture, export. At the time of export, you can apply for an advance authorization and replenish that stock by duty-free, importing duty-free. This replenishment was always possible under the advance authorization scheme, under the FTP. But funnily, the government in 2017, through that notification, said pre-import is a condition, physical exports is a condition. You will note that in 2019 January, they took out both these conditions, but the damage was done. The plea taken by the petitioners before the High Court was that this is very unreasonable. Under Article 14, reasonableness of a condition in the notification can be challenged. When you say it is reasonable, means you should look at the decision of the Supreme Court in Chintaman Rao's case, AR 1951, where they say what applies to reason is reasonable. That means a person of ordinary prudence, if you have to judge something, it should stand to reason. If it doesn't stand to reason, it is unreasonable. Now, what this Gujarat High Court said was this: if you want to first import, then manufacture, and then export, export order itself will get cancelled. Why? Because this whole process will take 3 or 4 months. And the supplier who wants the goods from abroad may say that I want this export to be done within the next 15 days or 1 month. How is it possible for you to comply with this condition? You will lose your export orders. I really sometimes, I wonder which government authority thinks in this manner. Which bureaucrat thinks in this manner? Every export order received, if you were to first start from placing an import for the raw materials and then get the goods and then manufacture and then export, the cycle itself may take 3 months. You would have lost the export order because nobody will be willing to wait 3 or 4 months for a regular manufacturing goods. So the Gujarat High Court said this kind of a condition could not have been imposed because it is unreasonable. It is unreasonable. Then they also said this condition of physical export versus deemed export, when both of these are recognized as exports, why are you discriminating against one another? They struck down this pre-import condition, however, first. And then, of course, the government realized that what they were doing is not correct. It will bring a complete stop to the wheels of import and export in the country. And in 2019, they realized their error and made the changes in the notification. And now we are back to square one. Most of the damage that we do legislatively is nothing. Whatever is a scheme which is working well, we try to destroy it. And then we bring it back after 1 year after realizing that we are wrong. I think we can avoid all this. We don't require our respective egos to come into conflict with all this business models which have been going on smoothly. If you look at advance authorization scheme for more than almost 3 decades, it has been running beautifully. It is one of the best schemes which promotes exports. 3 decades it has been running. There's no need for you to go tinker around with these schemes just because you introduce a law. Same thing I can say of the export promotion capital goods scheme. We have gone one step further and filed a petition in the Gujarat High Court challenging the very levy of integrated tax, which I have, of course, not, we will not deal with it over here because we are now only touching upon questions which have already been decided. This is a very important subject matter which has always engaged my attention. This is not a final order. Please note, I repeat, this is not a final order. Only notice has been issued challenging the levy of service tax. This is on GST, I'm sorry, GST on developmental rights. If you look at it, developmental rights being a right to immovable property, a benefit that arises out of land as per section 3(26) of the General Clauses Act. The petitioner has challenged the constitutional validity of developmental rights, tax on developmental rights, on the ground that it is neither a supply of goods nor a supply of services. It is a immovable property related transaction in Cheda housing The Bombay High Court itself has taken a view that developmental rights is a benefit that arises out of property and therefore becomes immovable property. The question of taxing TDRs and FSIs under the GST does not arise. And Bombay High Court has issued notice to the respondents to reply. I do not know whether they have still replied or they have not replied, but it is a good challenge. I wholeheartedly support the council who has challenged this developmental rights. He is right in saying that it is neither supply of goods nor supply of services. It is a right which arises out of immovable property. And please understand, in Tarak Chand's case, AR 1979, the Supreme Court said every right that arises out of immovable property is a benefit arising out of immovable property and will become immovable property itself. The taxation regime under GST, as I told you in the beginning of the speech, 246A, is a special provision for taxing only goods and services and not on immovable property. Therefore, I am just hoping that Nirman estate developers will win this case and provide relief to all the real estate builders and developers who are struggling under the impact of demonetization first and this COVID next. Now, why are the tribunals not being set up in this country? GST tribunals are not being set up in the country. Why? It is because of this decision. The Revenue Bar Association filed a writ petition saying so many things they challenged. One of the main things they challenged was this. In the judicial tribunal, you have two technical members, one of the state and one of the center, and only one judicial member. Is this possible? Is this correct? You say this is a judicial body, but there are two technical members and one judicial member. Is this correct? That was the challenge. Several other challenges were also made. In fact, if you see the judicial members, there is no scope for lawyers getting appointed as judicial members. It is very unfortunate that in spite of several judgments that the Supreme Court has passed, when they struck down the income tax, the tax tribunals, which was supposed to be set up as an alternate to the high courts, national tax tribunals as they were called, they were struck down already by the Supreme Court, saying that you cannot constitute an alternate mechanism to the High Court unless they are manned by judicial officers. In spite of several such lessons that are taught to the union government by the courts in this country, our bureaucrats refuse to learn. These are all provisions which they need not have done. They could have simply said, if you wanted two technical members, have equal number of judicial members. Or have a bench of 5 people sitting, 3 judicial members and 2 technical members. Why? You may ask me why you need more judicial members. You know yourself, after having practiced law for so long, I can tell you the presence of judicial members is very, very important, because when a question of law arises, a judicial member is, I'm not saying technical members don't know questions of law. There are many technical members who are exceptionally good. There's no doubt about it. But you require the presence of judicial members, because when the question of law arises, substantial question of law arises, application of legal principles, always, you should have that safety of a judicial member deciding it. You must not only do justice, but you should appear to be doing it fairly. You know your experience with the revenue officers. You know what it has been, what it has led us to. First appeals, the adjudication mechanism in the indirect tax, as well as the direct taxes, the assessment, you know that it is always revenue bias. When it comes to first appeals, 80% of the cases you lose high revenue bias. The second appeal which you come with, this is the only forum that is on facts which can be decided, that is the tribunal. And even if the tribunal has only technical members majority, what is going to happen to the country? In fact, in my view, the time has come where instead of having this so many tribunals, it is better they keep benches in the High Court dedicated benches for taxes. Every high court should have 2 dedicated tax benches, one for direct taxes, one for indirect taxes. If this is done, it will take care of all the problems which we are facing. Anyway, this is a very good decision of the Supreme Court. Of course, the revenue will go in appeal against this judgment. There's no doubt about it. But I believe that this judgment is well decided, and the composition of the GST tribunal of 1 judicial member and 2 technical members has been rightly struck down by the Madras High Court. And it would be better if this government actually amends the law and makes provision for a majority of the judicial members. This will at least take care of non-existence of the tribunal. And in fact, it will be better for us to have a tribunal functioning today. If it happens, resolution of disputes will be very quick. Now we come to another topic where also this is not a final decision. Just like what I told you about developmental rights, Bombay High Court has issued notice. Validity of the constitution of the authority of advance rulings has been challenged in the Rajasthan High Court. JVS Foods, Rajasthan High Court has issued notice. What is the ground? That it is packed only with the officers of the department. When you say authority for advance ruling, what is the position that he has to occupy? In the earlier, if you see in the income tax regime, the authority for advance ruling was headed by a Supreme Court judge. Today, if you look at the authority for advance ruling in each of the states and in the center, it is headed, it has only departmental offices. You are putting in 2 mechanisms. One, the AAR, the authority for advance ruling, which I called authority for adverse rulings, because 99% of the rulings are adverse. The authority for advance ruling composes of 2 persons, both from the department. Now, under the CGST Act, you have created an appellate authority for advance ruling. That is also a bench of 2 people from the department. So you appeal from Julius Caesar to Julius Caesar, no respite for you. And who are these? What are they supposed to do? An advance ruling is supposed to tell you whether tax is payable or not payable and settle. You don't get into disputes at all because you go into advance ruling. If that is the case, it should be manned by people who can take a view of the taxation law without bias. A foreign company or an Indian company which is putting up a huge project wants a finality in tax matters. They don't want to get into dispute and they don't want appeal, this one, that one, first appeal, second appeal, then the High Court, the Supreme Court. It will take 10 to 15 years to sort out these things. So if you have an advance ruling authority headed by a person who is a justice, who knows law, High Court judge or Supreme Court judge who heads it, then industry will give a fair thought to this and apply to the advance ruling authority because they know they will get a decision without bias. It is on that ground that it has been challenged in the Rajasthan High Court, saying that you have constituted a person without any judicial member at all, with only departmental persons. And therefore, the validity has been challenged rightly, in my opinion. Notice has been issued. Let us see how this case progresses. Now, this is as far as the constitutional validity challenges, some important decisions which are there. There are several other constitutional validity issues, to tell you the truth, which I have myself filed. I have not put it in this compilation because it would then amount to telling what all I have done. So I don't want to do that. They are also all at notice stage, which in several high courts, in Karnataka High Court, in Gujarat High Court, in Bombay High Court, several such challenges are there. To list a few, I will just give you an overview of 2 or 3 of them. Levy of integrated tax has been challenged in Gujarat High Court and Bombay High Court. That is one. Second, the levy on leasing transactions post 17, when a lease is completed before 17, but the installments are payable after 1/7, can you collect tax under GST? Has been challenged in the Karnataka High Court. It's pending resolution. Works contract entry in Schedule 2, construction entry in Schedule 2 has been challenged by me on the ground that it violates 366(29)(a) of the Constitution. It's pending. Notice has been issued. It is pending resolution. Like this, 3 or 4 or 5 cases are pending. Now let us come to issues relating to repeals and savings. This is a very important aspect of the GST law. And we have a landmark decision which has been just some time back. It has come, the Reliance Industries case, very detailed judgment. I have given this PPT. If you see it, we went into several loops and several. I will not confuse you with all the fact situation, but I will tell you only this fact situation, which is enough for you. Whether today I can amend the law relating to VAT, which was repealed or omitted before on 1/7/2017. If you look at Article Section 19 of the Constitution Amendment Act, it said this: the Constitution Amendment Act came into effect from 16th of September 2016. Please note these dates. 16th of September 2016. This amendment removed away the powers of the state to levy a tax on goods. Entry 54 was amended. This amendment was effective from 16/9/2016. Having made this amendment effective from 16/9/2016, they introduced Section 19, which said that existing laws will operate for a period of 1 more year, or when the GST legislations are introduced, whichever is earlier. So ideally, the GST, the existing laws would have been repealed automatically on 15/9/2017. But before that, on 1/7/2017 itself, our GST laws came. So all the existing laws stood repealed effective 1/7/2017. So a savings clause was introduced in 174, saying that in spite of the repeal, whatever actions were taken earlier will be protected. Whatever liabilities were taken earlier will be you will be liable to pay. What the government, there was certain issues relating to input tax credit, which was being fought out under the VAT regimes. Now what happened was, these disputes culminated in a position where the government lost these matters before the High Court. That went up to the Supreme Court. Supreme Court, in fact, gave the judgment in favor of the revenue. When they gave the judgment in favor of the revenue, however, it was quite late. Because of this, the GST had already been introduced. GST was already operational. So in 2018, what happened was, the Gujarat government introduced Section 84A. What does 84A say? The original limitation for issuing notice of 3 years was extended sine die without any limit. Because of the original period for reassessments which were there in the Gujarat VAT of 3 years had expired, and the Gujarat government saw that in respect of those assessments, they had won the matter in the Supreme Court on one of the issues against one of the clients. They wanted to reopen all the reassessments for the entire industry, all companies. But the period of limitation for reopening this reassessment was 3 years as specified in the Gujarat VAT. Now this 3 years had expired. And when they went to the High Court said, no, my dear, you cannot reassess this after 3 years. It is gone. They quashed those notices of reassessment. To overcome this time period, in 2018, after the introduction of GST, they made an amendment to section 84A and said that these revision notices can be issued anytime without specifying the 3-year period also. Even the 3-year period will not apply. This amendment to section 84A was challenged before the Gujarat High Court, saying that it is unreasonable for you to now amend a law which has already expired in 1/7/2017. How can you amend the law now? This fact situation gave rise to a very, very lengthy case law with some beautiful analysis by the Gujarat High Court. One must say that the leading judgments in this country on GST are coming from the Gujarat High Court, and rightly so, beautifully analyzed judgment. Now, the constitutional, what the Gujarat High Court, let me tell you, I will not get into everything, but I will tell you some important things that come out of this. Very, very important things that come out of this judgment. What the Gujarat High Court said was this. Normally, when a statute is repealed, no action can be taken. That is why under 174, there is a savings clause. The savings clause will protect what action could have been taken, but was not taken at that time. The liabilities incurred can be protected. But can you amend the law now? What the Gujarat High Court said is, several Supreme Court judgments say this. The legislature should be competent. How do you test the competency of the legislature to amend a law? Is it at the time when the law was enacted, or is it at the time when the law is getting amended? This is very important. The Gujarat High Court said, when you test the legislative competence, the test is not who enacted the law. The test is who is making the amendments. Is he competent? What the Gujarat High Court said is this. After the GST law was introduced, any amendments to the act now has to be done by two people. One is the union government and next is the state. The state legislature's exclusive powers over taxation of goods is not there. The union legislature's exclusive powers is not there anymore. As far as goods and services tax are concerned, it is a concurrent jurisdiction which has been vested with both the authorities. If it is so, the amendment has to be made only by both of them. One person cannot do the amendment. This is an extremely important proposition. I'm very sure the department will fight this tooth and nail in the Supreme Court. And therefore, they said this amendment to 84A could not have been done because now the state legislature alone does not have the competence to amend an act which is already gone. And another important thing which they said is, once it is already voided, omitted or repealed, the act itself has been repealed, you cannot go there and amend that law. Some of the things that they said are very, 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 very beautifully done. They also said, if you give an unlimited time to the revenue to do assessments and reassessments, it will become hit by the principle of manifest arbitrariness and become unreasonable. What is this manifest arbitrariness? Manifestly arbitrary is an aspect of Article 14. If there is any law, which is made, which subjects people to arbitrary treatment, in this case, You introduced section 84A, first of all, retrospectively. 1. 2. You said that any assessment, reassessment now can be done irrespective of the 3-year time limit. That means you never fixed time limit. Even after 20 years, they may be able to do an assessment and reassessment. This was held to be arbitrary and unreasonable, and 84A was struck down on that ground also. Not only legislative competence and excessive. So this judgment of the Reliance Industries, if you people get a chance to read it, it's a very lengthy judgment. Several propositions have been laid out. We can have, in fact, a 1-hour session on just Reliance Industries itself. It goes into so much of depth. So much of depth. So many principles have been laid out in that judgment. I thought I will just highlight 2 of these principles. One is legislative competence, which is very important. Therefore, in my view, once the GST law has come into force, legislature of a state cannot amend any repealed law retrospectively anymore. This is my humble view. That is what the Gujarat High Court also has beautifully dealt with in Reliance Industries case. Now I ask the organizers, should I give some time for question answers, or should I go ahead with this session and finish off some other case laws?
Sir, there are few questions only. We can, sir, you can continue.
I'll continue the case laws. Thank you.
Yes, sir.
Now this is a decision which is adverse to us. Rule 5A of the service tax rules is whether it's ultra vires. Now the Delhi High Court has taken a view that when you omit chapter 5, one of the grounds that were taken in this judgment in this was omission of the act. What happens to the rules? First of all, when you omit an act, can you take action under that act again? Is the question. Now there is a whole host of decisions that are there. If you look at the decision of the Supreme Court Constitution Bench in Raila Corporation's case, Supreme Court said omission of rule is not covered by section 6 of the General Clauses Act. What does section 6 of the General Clauses Act say? It says when an enactment is omitted, the actions that are taken there will be still saved, notwithstanding the omission, notwithstanding the repeal of the statute or enactment. Actions that could have been taken can still be taken. Liabilities and rights up to the date of repeal will still exist. That means, even though, let us assume I'm liable to pay some service tax I have not paid. Section and the service tax has now been, let us say, repealed, though it is omitted. What the Supreme Court said was, once you have repealed the legislation, and it has to be saved by section 6. Action can be saved by section 6. But repeal, section 6 itself applies only to repeal of an act, does not cover omission of rules. Same thing was said in Kolhapur Cane Sugar's case, where the Constitution Bench reiterated this view and said, omission of a rule is different from repeal of an act. And therefore, both of this will not come within the clutches of section 6 of the act. Now, if you look at what some states have done in the GST regime, they've introduced the CGST as sections 174, where actions taken under the earlier law are saved. Maharashtra legislation, GST, has been beautifully drafted. 174, the MGST Act is beautifully drafted. It not only saves the legislation, it also saves the rules. Specifically, some states have not saved the rules, they've only saved the act. The question which arises in all these cases is, if the act is saved but the rules are not saved, can you say the rules have lapsed and no action can be taken under the rules? This is the question which went before the Delhi High Court. Delhi High Court looked at 174 and said, anything done under the Act is saved. Therefore, rules are also by implication saved. I am not sure whether this view of the law is correct. Maybe right. This one view. But I am of the view that because of Kolarpur Cane Sugar's case and Raila Corporation's case, both constitution benches, omission of a rule has to be specifically saved as they have done in MGST Act. If they have not done so, the question of saving the rules does not arise. And therefore, I believe that this decision may not be, in my opinion, may not be correct. The same thing the Kerala High Court has also upheld, saying that 174 allows the earlier service tax notices to be issued even now, and they can be adjudicated even now. In Shreen Gold and Jewels, they upheld 174 and also said that action taken under the earlier laws of issuing notices is still valid. So you will have to, if a service tax notice comes to you, you have to reply to it as per Kerala High Court. Uttarakhand High Court also has taken the same view. But several high courts, this question is pending resolution, whether 174 is itself beyond the constitutional mandate or not. So these questions are pending before several high courts, and ultimately they will travel to the Supreme Court, and then one will have to see whether this view of the Kerala High Court is correct and Delhi High Court is correct, or some other high court may take a different view that is correct. One will have to see. Only future will tell us whether old show cause notices issued under the old legislations like excise and service tax can still be issued. This is a good decision, simple decision, where the state of UP wanted to, after the introduction of GST, wanted to levy an advertising tax under list 2, entry 62. The High Court specifically said, after the introduction of GST, you do not have the legislative competence to levy these taxes. You have to find your way and see if in list 2 there is anything which you can. If you cannot, after the amendment to all the entries, the question of levying an advertising tax does not arise. Struck down this levy. So the principle of promissory estoppel will take some time for me to explain to you. I will just start this discussion and then we can probably take it up or continue it tomorrow where time permits. Several of these judgments are also now in the Supreme Court. I was also passed one judgment. I don't think I put it in the PPT VVF Industries case. I call them as unfortunate decisions. Why? Because if you look at the VVF Industries case, the Supreme Court said notifications which are issued under the Act can be withdrawn at pleasure. But the principle of promissory estoppel is this. I promise to the industry. What did the government in Gujarat do? In this case, Uttarakhand. In VVF Industries case, it was Gujarat. When Kutch was devastated by earthquake, to rehabilitate the people, the Gujarat High Court gave certain incentives. This incentives was to set up the industry quickly. The entire tax was to be refunded. This was a scheme made by the Gujarat government to ensure that the region of Kutch will develop. So they made a promise. I will refund the tax, whatever is collected. Once a promise is made by one person and is acted upon by another person in good faith, the person who made the promise cannot go back. This is the principle of promissory estoppel in simple language. There are exceptions to this principle. The legislature, for example, can make amendments in public interest. Now, the Gujarat government, having issued notifications for refund of tax, started making amendments as is want by the government. They said, henceforth, you will not be in a position to get the entire tax refund. Tax refund will be respected to the value addition that you make. In other words, they said earlier you could get 100% tax refund. Now they said if your value addition is 20%, only 20% of the tax refund you will get. If it is 30%, only 30% of the tax refund. This was challenged in the High Court of Gujarat. The matter went to the Supreme Court in VVF Industries case. If you look at the decisions, the earlier decisions in promissory estoppel's case, Indo-Afghan agencies case, Motilal Padampat sugar mills case, the Supreme Court had clearly said if you have made a promise, you can't go back on it. But the latest trend today is that the revenue will take an answer. Always they will have this answer. I'm seeing this across high courts and even in the Supreme Court. They have a standard answer to every question. There is misuse of the scheme. This is a standard excuse of the revenue. What is the misuse? They'll never bring on record. They'll simply make a statement. There is misuse. Once they make it, the judges get, they want to know, oh, is it so? There's something happening. Something is fishy. You can't blame the judges because they have to look at both the sides. So, what, in my opinion, the courts should do is this. If the revenue takes a stance, in VVF Industries case, the revenue took the stance and the Supreme Court said, yes, the government can amend these notifications. But what I would like the courts to do is this. If the revenue takes a stance that there is a misuse, they should be asked to make an affidavit proving with the evidence how that misuse took place. You should not be able to just say that there is misuse and get away with it. Prove with facts. Prove with facts. If you prove with facts that there is a misuse of the notification, yes, what the Supreme Court says is absolutely right. But when we look at VVF Industries' decision, I was not able to see what materials the revenue produced before the Supreme Court to establish that there is a misuse. There doesn't seem to be any material. That is why the Gujarat High Court in VVF Industries case had struck down on the principle of promissory estoppel, saying that you do not have materials to show there is misuse. So in my view, the test of promissory estoppel is this. If you have made a promise and you want to go back on it, the government should have material to prove that there is a misuse of the notification. If they have that material, yes, they can withdraw the notification or amend the notification. If they don't have material to prove misuse, then they are hit by the principle of promissory estoppel. I hope that some decision in future will lay down this principle which I'm explaining to you very clearly. If you want to go away from your promise, please go ahead and show materials to the court that the industry is misusing this notification. I'm not saying the industry is not misusing, they're capable of doing it. But then they must very clearly bring evidence to prove that this is happening. So therefore, even though I did not discuss Hero Motorcorp's decision, which went along the same line, I discussed the decision of the Supreme Court itself in VVF Industries case, which I have not displayed here. It was also reported recently in 2020 TIOL. You'll find this decision. I think with this, I will stop and take the questions. Can you please ask me the question, sir? Hello?
Sir, I think I'll take up some of the questions here.
Please, please.
Some of them seem to be a little away, but you can take a call. One of the question is clarification on directors' remuneration. That is whether company need to pay GST under RCM.
See, this director's remuneration business, I've always been telling, a director is not a person. One is not a person who's just an employee only. You have two types. The managing director definitely is an employee. He takes a salary. He is covered by Schedule 3. There's no question of tax on him. When it looks at directors' remuneration, which they get in terms of fees, the director does not supply any services to the company at all. He is a person who occupies the post as in a fiduciary capacity, like a trustee. He's paid that fees for that trusteeship function or the fiduciary capacity that he holds. He has a duty. The GST law should recognize that there's a difference between duty and supply under consideration. In my view, none of this director's remuneration can be brought to GST tax. Yes, sir. Next question, sir.
Sir, another question is from Anand Sai Prasad. Will aspect theory not apply for double taxation argument on freight, sir?
See, the aspect theory is what I may not have, I'm thankful to Sai Prasad. The aspect theory, if you see, what is the aspect theory which says that in one aspect you can tax the transaction, in another aspect also you can tax the transaction. If there are two aspects to a transaction, both can be taxed. But when you have only one aspect to a transaction, how can you tax it in two laws? Is my view. In this, this relates, I think, to the customs law which is talking. This ocean freight case, is it not that one? Is the question relating to ocean freight?
Appears so, sir. I don't know if the participant can unmute himself.
Okay. If he can unmute himself, I'll be glad to answer this straight away.
Anand Sai Prasad, can you unmute yourself if you are there?
Yeah. Good afternoon, sir. It's with respect to ocean freight itself, sir.
Oh, it's with respect to ocean freight.
Yes, sir. Good afternoon, sir. Namaste, sir.
Namaste. How are you?
Sir, good, sir.
Tell me, what is it that you wanted me to address?
Sir, freight forms part of the goods component under section 14 of the Customs Act as the CIF value.
That I covered it in the. I covered it in
sir.
That aspect I already covered in my speech. You came in late.
So the aspect that I wanted to say was, in GST, the taxable event is the service portion on which they want to tax. In the customs law, it is bringing of goods into India on which they want to tax. The valuation provision says it is CIF value. Yes, sir.
Okay, fine. Now you look at it this way. This is my answer to you. The GST law itself says it should be taxed as composite supply of goods. Right?
Yes, sir. Yes, sir.
Now, if that be the case, you have already collected IGST on the supply of goods when they enter your country.
Yes, sir.
Having collected that tax as IGST on goods by including the freight portion, is it permissible for you to tax it again as services? You've already collected the IGST. You can collect two taxes, different taxes on one transaction if there are two aspects. Can you collect the same tax twice over, saying for one I will treat it as goods and one you will treat it as service? In my opinion, aspect 3 doesn't apply here at all.
I'll take it up offline with you, sir. Some other.
No problem. No problem.
Yes, sir. Thank you, sir.
Thank you.
Yes, sir.
Sir, next question is notice period pay taxable under GST?
I have already addressed that. No, I told you that it is not taxable. G, T, and D. Madras High Court's decision, HCL Learning's case, Madras High Court is a tribunal decision. Very clear that during the course of my speech itself, I said it is not taxable.
Sir, another question again from Anand Sai Prasad. With respect to Madras High Court decision, definition of consideration itself includes abstain from doing something. Hence, would not tolerating non-provision of employment by employee be a declared service? I think he's referring to Schedule 2 probably.
I will go one step further and tell him this. First of all, the concept of value-added tax is when you add value. When you do not add value, there's in the chain, there's no question of paying tax. This is so many decisions are there in the ECJ. 1, 2. Let us look at one more aspect which I will touch upon now. You look at Schedule 3, Entry 1. Services by an employee to the employer in the course of or in relation to employment. Any notice pay recovery is in the course of employment or is in relation to employment. When the services are being rendered by an employee to an employer. You cannot deem this as services by the employer to the employee. This entire transaction arises out of the employment contract. What is the employment contract? Where the employee gives services to the employer. Even the notice pay termination is a clause in that contract. Therefore, you cannot deem this to be service by employer to the employee. And the tax itself will fail for that reason. It is an adjunct, or let us say it is ancillary to the employment contract where the employee gives services to the employer. Therefore, in my view, this so-called taxation which they are proposing under Schedule 2 is wrong. That you also look at it this way. The third ground which I am giving you is this. After the insertion of Section 7(1) capital A, Schedule 2 is only a classification entry. What does Section 7(1) capital A say? If it is a supply under Section 7(1), then it will be classified under Schedule 2. If it is not at all a supply, where's the question of you going to Schedule 2? This is another answer to Mr. Sai Prasad's question. Yes, sir.
So next question is from Murtuza. Sirji, pre-import condition, I want to ask one question. Suppose DRI issued notice to the SSE to recover IGST dues due to violation of pre-import condition between
Yes.
1st July 2017 to January 2019. What is the course of action for the client? Can you give advice? I mean, removing of pre-import condition from retrospective effect that had not done yet. Please throw light.
Yes, you have to go to High Court, challenge it. I have challenged it in Bombay High Court already. The petitions are pending. COVID came in between, otherwise my petition would have been heard fully. Notice has been issued to the revenue. Please challenge it in the High Courts. That is the only course of action.
Can I take next one, sir?
Yes, sir. Please go ahead.
Anand Sai Prasad asks, is development rights not a license within the meaning of Section 52 of Easement Act? Can we treat development right as benefit to arise out of land, since development right is a subset of bundle of rights relating to land already existing at the time of JDA?
Yes. So I will look at it this way. You are looking at Schedule 2 and say it is license. You are saying it's a license to occupy land. If you look at the phraseology used, license to occupy land. Now, the developmental right, as I've told you, two things. After the insertion of 7(1) capital A, it should be a supply first of goods or services, then only you go to Schedule 2. If it is not supply of goods or services, you cannot go to Schedule 2 at all. Now, developmental rights is classified under the General Clauses Act as an immovable property as interpreted by the Bombay High Court in Cheda Housing's case. Sumeru's case does not apply because they never ever went into this question. So that is point number 2. Developmental rights, what's the nature of developmental rights? Ideally speaking, the developmental right is a license plus something. What is that something? License 1, you occupy the land or whatever it is. You are going to develop that land. So it is not a mere license to enter the land and take and go. You enter the land to do something on the land. So if you look at the decision of the Supreme Court in Sunrise Associates case, AR 2006. Justice Umapal says you will have several rights in a lottery ticket. When you buy a lottery ticket, you have several you have a bundle of rights. But what right defines it is the last of the right, that is the right to receive a prize. That is why it becomes an actionable claim. So every right is defined by the last of the right, not the first of the right. So a license, a developmental right is a license plus that something. It is that plus something which defines what it is, not the mere license. So my answer is that developmental rights cannot be subjected to the GST regime at all. Next question.
Again, question from Anand Sai Prasad. Since 246A overrides 246 and since 366 bracket 29A is with respect to entry 54 of list 2.
I couldn't hear you. Please repeat. Please repeat.
Since 246A overrides 246 and since 366 bracket 29A is with respect to entry 54 of list 2, would not the said article would not apply to GST law? Is this question.
See, you please look at the Builders Association case. AR 1989, Builders Association case says 366/29A is a definite constitution. If that be the case, our simple thing is only this. What we are arguing is simply this. You have defined works contract to as a vivisected it and said that there is a goods to be taxed. Fine. But when you made the CGST Schedule 2, you said the entire works contract will become services. Is that constitutionally permissible when you have a definition in the Constitution saying works contract consists of both goods and services and the goods aspect is subjected to tax? That is the question we're putting up before the courts. Otherwise, you remove the definition. Who asked you to keep it there? In fact, in the draft amendment, the first draft, you wanted to remove 366/29A, but you never removed it after that. So that is the answer to this question.
Sir, what is your view in case of cess being excluded from eligible duties? Whether the government is correct in amending it retrospectively?
Which cess?
Okay, I think it's not clear. Sir, I'll take the next one. Is it mandatory to take ISD registration if we have 2 branches in India, both are registered under GST?
I have to see ISD is, I don't know why this question is coming in this forum, but nevertheless, I will answer it. ISD is only an option as per me. If you read it carefully, 20(2) says the company may. It doesn't say you shall take an ISD registration. If you want to distribute the credit, take the ISD registration. If you don't want to distribute it, don't do it.
Sir, I think 1 or 2 more questions are there, but you can choose whether it is relevant. Latest position on service tax audit by department legally, he's asking.
Now I think most of the people are losing this writs in the courts.
Service tax paid under GST regime, any mechanism to take credit under GST or refund under either of the laws? I don't know if this is clear.
I think you should go try a refund claim, and if it is not given to you, you should file a writ petition for challenging the non-giving of such refunds.
If supply to SEZ is made without LUT and without charging, is he liable to pay interest? I think this
is a question. I think I will. Can you defer this question to tomorrow?
Yeah. Okay, sir.
Defer it to tomorrow, but please ask me this. It's an important question. It's a long thing which I have to tell.
Yes. What is your take on agreeing to act or tolerate an act? I think you've answered, but
I have already explained that take. I have already explained it, telling.
So basically, that schedule to entry is saying what is the role of that entry.
That is up to the government to explain to me. I don't know what that entry is. It is for them to say, is it for non-competing fee that you want to tax? That is what your education guide said when you introduced it in the service tax regime. This is what you said. It is for the government to clarify, but non-supplies cannot become supply by virtue of Schedule 2, in my opinion.
Sir, for High Court decisions regarding transitional credit, how practical is it to take credit which were missed based on High Court judgments? Not sure whether this is clear, sir.
We'll deal with it tomorrow. I'll deal with all those transitional judgments tomorrow.
Maybe one last one. So in case of service given by Maharashtra party on immovable property in Gujarat and party who had order having place of supply in Maharashtra, I don't know if this is clear. We raise
I think
IGST.
I'm not clear. I have no idea if he's trying to say that he is located in Gujarat and he has a lot of properties across the country. Whether he has to take registration everywhere, he need not, in my opinion.
Okay, Virag bhai, I think you can probably close it and we can take tomorrow some of these questions.
Yes.
Virag bhai.
Sir, thank you so much, sir. Sir, you have answered most of the questions, and most of the participants are for asking presentation, sir.
Presentation, I will send it. No problem. I'll send it to you.
Yes, sir. Yes, sir. Thank you so much, sir. Would like to request now Apna ji, our guide, for a formal vote of thanks.
Thank you, Virag. This is give me an immense pleasure to propose a vote of thanks for our esteemed speaker, CA, CS, ICWA, LLB, P. Raghuraman Sir, for a wonderful lecture on landmark judgment on GST. Who is having vast experience on the GST, FEMA, customs, has appeared before the highest courts for the challenging the courts and get your final verdict on the various cases, which are guidelines for the landline for the next GST era on the landmark judgments. He is a really very renowned personality on GST, and the various judgments and landmarks have decided under the guidance, under the discussion, under the challenging by him. He is having a very bright academic career, as he the top institutions from accounting, financial, like CA, CS, ICW, LLB. So, in my opinion, I think so. The judges are easily accepted the argument of this not personality without any arguing further. He is a very well visiting faculties of very renowned institution, IIMA, Bangalore, and he is also author of the Landmark International GST and Indirect Taxes book. So, and he is also a regular writer on this national level magazines on GST, FEMA, etc., etc. And he was also a committee member of the WIC, ICI, also as the Indirect Taxes Committee. So, thank you very much, sir, for the best and wonderful lecture session on this webinars.
Thank you, Apna ji. Now would like to request Abhishek Shah for concluding remarks for the day one. Abhishek, unmute yourself.
Thank you, Virag. Thank you, sir, for your first day webinar. Sir, you have covered almost entire area of recent judgments, and it's our privilege to have you in our on our network. So, thank you very much, sir. So, friends, apart from this webinar, we are having a special yoga webinar on Sunday, powered by Isha Foundation by Sadhguru. So I requested all the members to please join that webinar. That is free for all the members. So with this, we can conclude for today's webinar.
Thank you so much.
Thank you.
Tomorrow we will meet sharp at 11:30.
Thank you.
Thank you all.
Thank you.
Thank you all.